Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Brian Stutland, Chief Investment Officer with Equity Armor Investments. We're going to take a look at movement in the Nasdaq-100 and, of course, what we're seeing in VolQ and the volatility space in general. Brian, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me.
All right, Brian, before we get into the news of the day with Apple and how it's impacting the index, we certainly have had a lot to cover when it comes to volatility going into that Thanksgiving weekend, which is typically a little bit quiet, but certainly saw a lot of fireworks. What were you seeing in the volatility complex?
Yeah, it was really interesting. We talked about this the week before Thanksgiving and really throughout the end of October up until Thanksgiving. Let's look at VolQ, right? That's a measure of volatility and implied options on the Nasdaq-100, right? So when you look at that, it was rising basically all throughout the month of November with the Nasdaq making new highs. So that's very unusual. What we typically like to see is that volatility subsides. Fear comes out of the marketplace as stocks make new highs. But that wasn't the case at all, which told me investors were out there making hedge bets, meaning buying puts on the Nasdaq-100 index, expecting a little bit of a sell-off. And then we got it, obviously, right after Thanksgiving. So it wasn't a surprise to me that that was coming because it was a little unusual. It finally, VolQ, when you look at it, was in this range, 22 to 15 on the lower side of it, broke out of that range on Friday to the upside. So I'm not sure, I go in and buy. Obviously, the market's doing real well today, but I'm not sure I jump in right away and try and catch this falling knife.
Right. And Brian, it's so interesting. I remember you saying that and how it was a little bit complacent in the marketplace. And since we had that sell off on Friday, then we had the rebound on Monday, then Tuesday, then back to Wednesday again with these more than 1% moves. We haven't seen those kind of moves, I think it's since it was like October 14th. So it was a little bit of a shock to the system there. But let's go back and talk about what's happening today as it relates to Apple and some potential supply chain concerns. I mean, that really has a weighting on the index.
Yeah, it has. And I obviously, I own Apple. We own Apple for clients as well. So, I'll speak to that. But when you look at it, obviously, Apple, a big component of the NASDAQ, but also all the other, guys around there that are in that supply chain, obviously affected, which is, kind of weighing the NASDAQ down a little bit. We're seeing a huge rotation out of NASDAQ index into, value type stocks today. I think it's kind of temporarily. I mean, it's kind of ironic. Apple's basically trading at all-time highs, and then they come out and say this news. I mean, it's certainly good timing on their part. So, if any sort of pullback here on names like this, I'm definitely a buyer of that.
Well, let's talk about how EAVOL performed in portfolios, because that's the hedge overlay around the Nasdaq-100. How did it perform in investor portfolios over the past week where we've seen these 1+% moves to the upside or downside?
Yeah, sure. I mean, look, over the last month, like we talked about, volatility's been up. So we buy VIX futures through our EAVOL. And when we combine that with what we like to say, best of breed index, the NASDAQ, it's done quite well. It's actually outperforming the NASDAQ itself. So like I said, when you own volatility with stocks, it's been a great sort of trade. Volatility is one of those things that mean reverts. So there's opportunities to buy when it's low and sell when it's high and not get whipsawed as much as we're seeing. Markets can go up and down as we've seen over the last few days. So, owning VIX futures with NASDAQ has been a great way to play it. And obviously that's a strategy that we employ for clients. And we've been happy with the way it's performed. Typically it's a hedged equity strategy. That's how it should lie in people's portfolio. But in this case, with the vol pop and monetizing these volatility events, it's given us some comfort there and actually performed quite well, outperforming the NASDAQ itself, actually, if you just bought and held that. So that's how well that sort of hedged equity strategy has played out.
Right. And let's talk about seasonality a bit here. I can't believe it's December 2nd as we speak today. Yeah. This year just has been an absolute whirlwind. Seasonally, how would you expect stocks to perform? I feel as if, the last couple of weeks of the year, everyone takes a break. It's been a crazy couple of years. But I almost feel like it might not be quite as quiet as everyone may think it is, the last couple of weeks of the year.
No, I mean, it's a great point. I mean, look at 2018 when you headed into November, December, on Christmas, right before Christmas Day, we had that huge drop in the market in 2018. So as volatility picks up, I mean, you never know when the merry-go-round is going to stop with some of these volatility events here. And I don't think we've quite seen it. I'd like to see volatility or VolQ that is, actually make a lower high before I'm willing to jump in and make the seasonality trade, where typically at the end of the year, stocks rise, especially as you head into Christmas, names like Amazon that we own for clients, stuff like that, where, I'm willing to then go ahead and buy those kind of names. I just haven't seen the volatility subside yet. We could be in for a 2018 type December here. I'm still waiting for the all clear. That key level 22 on the VolQ is what I'm really watching. I want to see us drop back below that and get into that lower trading range to say, hey, fear has subsided now.
All right, Brian, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.